What's up everybody, GenExDividendInvestor here. The $1.59 million on the thumbnail to this video refers to the dividend portion of my overall stock portfolio, which is what I go over in depth on my channel, so feel free to subscribe and watch my other videos if you love dividend stocks and want to learn more about me, my dividend portfolio, and how I invest. In this video I'm going to reveal the top 10 stocks in June that investors on my dividend Discord server voted that they are buying or want to buy. I'm also going to answer a question at the end of this video that a lot of you recently have asked me. I run the world's largest free dividend Discord chat server, which has over 2,900 investors on it, and it's growing all the time. It's neat to be able to chat with such a large group of dividend investors pretty much 24 hours a day. Now, one of the channels I've created on my Discord server is for polls that people vote on. Some of these polls I come up with, and others come from members who suggest them. One of the polls I run lets people vote on all the stocks they are buying or plan to buy each month. I keep adding to the list of stocks as people request it, or as I find stocks that are missing on it. These are both dividend stocks and non-dividend stocks and ETFs. So far, the June poll has over 100 people that have voted on it, and more are voting all the time. You can vote for multiple stocks that you're interested in. One thing to realize about this poll data is that all the investors on my server are passionate about dividend investing, which is why they're spending time pretty much every day chatting with other dividend investors. We also have a professional stock analyst, various self-made stock millionaires, and we have a ton of finance YouTube channel creators on it, ranging from brand new channels to ones with over 20,000 subscribers. In fact, I have a subscriber who has a YouTube channel with over 1 million subs on it, but he's asked me not to tell who he is. So if you'd like to become part of the team which votes, then jump onto my Discord server and I can almost guarantee you're going to find the experience both fun and valuable. And as my normal disclaimer, just consider this entertainment and not financial advice, but I want to give you some context to the people who have the opportunity to vote. I also want to personally thank you for taking a moment out of your day to watch this video. It means the world to me when you slam that thumbs up button. I really love making these videos, and I feel so fortunate that I get the opportunity to share my passion of dividend investing with you. Alright, let's do it. I'll be using Seeking Alpha and Google for most of this data, and I'll be rounding some of the numbers. The 10th most voted stock for what people are buying or plan to buy, with 22% of people voting for it, is JP Chase, aka JPM, which I'd argue is one of the favorite financial stocks amongst dividend growth investors. JPM has a nice 3.5% yield, an awesome 5-year dividend CAGR of 16%, and has 9 consecutive years of dividend growth, which is just under the 10-year minimum mark I normally like to see. Did you know that JPM, aka John Pierpont Morgan, was voted the #2 most influential business leader of all time by Forbes magazine? Take a guess as to who you think #1 is in the comments down below, but don't look it up. Now, most of the large big US banks, including JP Morgan, suspended their share buybacks in March. Combine that along with interest rates that are almost at record lows, it means that bank margins are taking heat. And then add a potential recession on top of things, which to me makes it seem unlikely that demand for loans will be too high. And why does that matter? Well, the main way banks make money is to borrow at one interest rate and lend it out at a higher interest rate, taking the spread in their pocket. We see JPM's at about $106 per share, well off their $142 52-week high and above their $77 52-week low. They've slowly been trending up recently. The next most popular stock at number 9 in the poll with 23% of voters is a strong tech company I own, which is Apple Computer. Apple has a low yield at just over 1%, their payout ratio is a great 26%, their 5-year dividend CAGR is awesome at a bit over 10%, and they have 7 consecutive years of dividend growth, which is a bit low for what I normally want as a minimum. We see that they're at a poor PE of 25, and we see they're at $322 per share, which is just off their 52-week high of $328 and well above their 52-week low of $181. Apple looks like it's struggling off the pandemic, which is pretty amazing. The next most popular stock at number 8 in the poll with 24% of voters is a well-known healthcare company I also own called Pfizer. Pfizer has a great yield at 4.2%, their payout ratio is awesome at 56%, their 5-year dividend CAGR is a good 6.7%, and they've had 10 consecutive years of dividend growth. We see that they're at a great PE of 12.9, and we see that they're about $36 per share, which is below their 52-week high of $44 and above their 52-week low of $28. The next most popular stock at number 7 in the poll with 24% of voters saying they are buying it or would like to is a very well-known and popular industrials company I own, 3M. 3M has a solid 3.6% yield, an okay payout ratio of 73%, an awesome 5-year dividend CAGR of 11%, and an incredible 61 consecutive years of dividend growth, making them part of the dividend kings. We see that they're at a PE of 19, and we see they're at $163 per share, which is below their 52-week high of $188 and above their 52-week low of $114. The next most popular stock at number 6 in the poll with 27% of voters is another healthcare company I own, AbbVie. AbbVie has an awesome 5.1% yield, a great payout ratio of 45%, and a ridiculously good 5-year dividend CAGR of 21%. Seeking Alpha's chart says that they're at 7 years of consecutive dividend growth, but you can also find sites like MarketBeat that say they have an incredible 47 consecutive years of dividend growth. The disparity lies in the fact that they spun off from Abbott Labs 7 years ago. So do you count their years with Abbott or not? That's a nuance I'll let you to decide. Sometimes even numbers and metrics aren't black and white and can have nuance and context. One concern about AbbVie is that a majority of their revenue comes from Humira, which is the world's best-selling drug, but by losing patent protection it opens up the gates for generics to absorb some of their revenue. Get it? A drug? Absorb? Nothing? Mueller? This thing on? So AbbVie's lawyers are working overtime to try to throw up other patent walls to slow down their competitors from replicating what they have done, and they're driving tons of focus to grow their drug pipeline, doing things like acquiring Allergan, a company Pfizer once tried to snag for $160 billion, but then walked away from during merger talks when the Obama administration changed Treasury rules in order to stop companies from moving overseas to cut their taxes. They are at a decent PE of 16, and we see that they're at about $85 per share, below the $98 52-week high and above their $62 52-week low. It looks like AbbVie has already rebounded beyond the pandemic crash. The next most popular stock at number 5 in the poll with 28% of voters is my favorite dividend growth tech company I own, and that's Microsoft. I bet you in 9 years Microsoft will become a dividend aristocrat, and it'll be considered a favorite amongst dividend growth investors, much like J&J is now. You heard it here first. That reminds me, I've been so focused on growing this YouTube channel that I've shirked my duties playing on Xbox. I'm sorry, Microsoft. You know, I really miss sniping someone at 200 yards. Does that make me a bad person? Microsoft has a low 1.1% yield, an incredible payout ratio of 36%, which basically means they should be able to raise their dividend a ton, and they have an awesome 5-year dividend CAGR at 10.5% and a solid 16 consecutive years of dividend growth. I've held Microsoft since the 90s, and it's my best total return stock, which means capital appreciation plus dividends returned, which I strongly urge you to understand for each of your stocks, as total returns is arguably one of the most important metrics of any investment across all asset classes. They're at a high PE of 31, and we see they are at about $184 per share, just a bit below their $191 52-week high and well above their $125 52-week low. Microsoft is kicking the pandemic's butt. The next most popular stocks, tied at number 4 in the poll with 32% of voters, are Coke, which is a holding of mine I love, which makes my favorite soda and Diet Coke, and Pepsi, another investment favorite of mine, which I feel has better financials than Coke, along with a stronger diversity of products. People always ask me why I own both Coke and Pepsi in my portfolio, and I tell them when I was single I dated both blondes and brunettes. I love both apple pie and cherry pie. I love Ferraris and Lambos. My point? Why limit yourself to just one good thing? For this analysis I'll start with Coke since they come first in the alphabet. Coke is a common stock that dividend growth investors love, just like Warren Buffett loves it. Coke has a nice 3.4% yield, a high payout ratio at 87%, an okay 5-year dividend growth rate of 5.6%, with a fantastic 57 consecutive years of dividend increases, making them a king. They are at a decently high PE of 21 and are at $49 a share, below their 52-week high of $60 and above their 52-week low of $36. I guess people like their Coke products even during pandemics. Is there anything you like to have more than a Coke and a smile? Well, maybe a Pepsi, the other stock that was tied at number 4 in the poll. Pepsi has a decent 3.1% yield, an okay payout ratio at 77%, and a good 5-year dividend growth rate of 8.4%, with an awesome 48 consecutive years of dividend increases, making them a dividend prince, almost a king. Pepsi has a high PE of 25 and are at $132 a share, below their 52-week high of $147 and above their 52-week low of $101. I love Pepsi, and I've always loved one of their products, Cheetos, ever since I was a kid. The next most popular stock at number 3 in the poll with 36% of voters is almost everybody's favorite, J&J. I know, some people don't like it, but I said almost everybody. I bet even Hannibal Lecter would find J&J delicious. Bet you didn't think you'd hear anything about Hannibal Lecter in this video, did you? J&J has a low 2.75% yield, a great payout ratio at 52%, and an okay 5-year dividend growth rate of 6.3% and an awesome 57 consecutive years of dividend increases, making them a dividend king. J&J has a decently high PE of 23 and are at $148 a share, a bit below the 52-week high of $157 and above their 52-week low of $109. The number 2 most popular stock in June with an incredible 45% of voters is AT&T. T has a crazy nice 6.5% yield, a decent payout ratio at 65%, and a weak 5-year dividend growth rate of only 2.1%, with a great 35 consecutive years of dividend increases, making them a dividend aristocrat. In my opinion, T has a lot more risk than Verizon, but I also believe there's a lot more upside if they continue to pay down their debt aggressively, which is a new corporate strategy they're following, partially thanks to an activist investor who's pushed management to do so. T has a decent PE of 16.6 and are at around $33 a share, below their 52-week high of almost 40 and above their 52-week low of 26. I'm excited to see how their new HBO Max offering does once the Game of Thrones prequel hits HBO, which I'm guessing will be in 2021. The series will be called House of Dragon, and it is set 300 years before the Game of Thrones, and it will focus on House Targaryen. Did I mention there'll be dragons? If you're excited about the next Game of Thrones HBO prequel, then leave a comment down below like a good little bird. Oh boy, it happened. The #1 most popular stock that passionate dividend investors on my Discord are buying or want to buy is none other than the monthly dividend company itself, Realty Income, ticker O, at 47% of the voters. Whenever I think of O, I think of that scene when Harry met Sally. O has a great dividend yield at 4.65% and an awesome 26 consecutive years of dividend increases, making them an aristocrat. We see a mediocre 5-year dividend growth rate of 4.38%. Now, all that being said, I do see some risk with O if the pandemic persists. But I wouldn't hold it against O if they did need to adjust their dividend due to the pandemic, as I'm confident they'll come back strong once we're totally past this. As you probably know, using payout ratio for REITs doesn't make sense normally, because since real estate often appreciates over time, amortization and depreciation influences a lower EPS artificially and thus can make a REIT's payout ratio seem to be artificially high. Instead, we use funds from operations, or FFO, to look at their operating cash flow to gain insights into how safe their dividend is. Adjusted funds from operations is also used, which adjusts FFO with CapEx. So let's look at the percentage of AFFO which is paid out as a dividend and use that as a correlation to payout ratio. And I'm okay with it being a bit higher than normal payout ratios because REITs are required by law to pay out the majority of their taxable income as dividends. So I just pulled this data and you can calculate it if you are so inclined. You can divide dividends paid by AFFO to get your percentage. This info can be found on the investor relations portion of O's website. Okay, now I'll answer a couple of questions that a lot of you have been asking me recently. Many of you watched my video I released a few days ago where I talked about how my dividends are dripping $6,892 in June, which is a new monthly record for me, and how I knew I'd be getting that amount due to my dividend spreadsheet 2.0 that I'm working on, which algorithmically calculates that, plus does a bunch of other amazing things that I've not seen any dividend spreadsheet do on YouTube or on the web. The questions I was asked was when will I release my dividend spreadsheet 2.0 and how much will it be? In terms of when, I can only answer soon. I don't say that to be cryptic, but instead because I honestly don't know when I feel it'll be ready. I've put in literally hundreds of hours on improving it over my 1.0 version, and I'm not kidding when I say it will blow your socks off in terms of value it provides. I use it on a daily basis right now and absolutely love it. Love might be a strong word for a spreadsheet, but I do, I love it. And I won't release it until I feel it's ready, so I ask for your patience. My plan is to offer it as a monthly subscription service to anyone as long as they remain a Patreon aristocrat or king, as those are the people who are really showing their support for my work, and thus it'll be a way I can show my appreciation to them. Speaking of my Patreons, I'd like to thank a few new Patreon supporters. Some people call them patrons, but I call them Patreons. First we have MJ Regan 88, who upgraded from a champion to an aristocrat, which means that he now has access to a private invite-only channel on my Discord, where he helps influence what videos I do, he gets to vote on which thumbnail I use, and he gets to watch my videos before they go out to the general public. I also give priority to aristocrats and kings on all my social media platforms, whether it's YouTube, Discord, Instagram, Twitter, or in my podcasts. And it also means that once I release my 2.0 dividend spreadsheet, that he'll be able to use it as a service for as long as he remains an aristocrat. We also have Ari who joined up as a king, so thanks Ari, I look forward to getting to know you better. And last but not least, we have Big T who just joined as an aristocrat. I really enjoyed our conversation on Discord about pensions and look forward to chatting with you more in the future. For those of you that don't know, I run the world's largest free dividend Discord chat server, and the last time I checked we had over 2,900 dividend investors on it, and it's growing all the time. And I'd like to give you my sincere thanks for watching all the way to the end. These videos take a lot of time and energy for me to create, so liking my video is a simple way you can thank me. Please subscribe if you haven't yet, and consider checking out my Patreon page and my affiliate links in the description of this video. And I'd like to leave you with this quote from Amelia Earhart, who was the first female pilot to fly solo across the Atlantic Ocean. She once said, "The most difficult thing is the decision to act, the rest is merely tenacity." I ask you to take a moment to reflect on that. Thanks for watching, and I'll chat with you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.